So, like, my first question to you, Frank, is like, what is Metafide and why is it needed? Like, I mean, what are the users or what problem are you guys actually solving with this?
Yeah, we started Metafide as a way to help people sort of protect themselves. Um, a lot of times the crypto markets are driven by hype and FUD, right? So you can't really tell what's real, what's got a viable quality asset behind it versus what's just people pumping and sort of quick hit instant gratification. So what we did is we started as a rating system, sort of like a Moody's for the blockchain, where we take every traded digital asset and then score it every 2 minutes. So it keeps a live, up-to-date score. And it's very sensitive. It reacts to things like, rate of cadence of trade, number of unique tokens coming into existence, token velocity, um, the price movements in the near term, and then overall things like how many unique wallets are transacting at any given time. So what you want to do is get an idea for how viable the community is that's using it, and make sure it's not just a few whales manipulating an asset. But that was the first stop, and it's necessary because even though the blockchain is readable by anyone, the industry hasn't done a great job so far of making a really accessible, simple way to understand things at a glance. And that's where we started.
Correct.
We've since moved on to offering trading tools to institutions because that's another underserved market where, there's a bunch of unique ways about, cryptocurrency trades and how those markets work at a really high level when you're looking at high frequency trading. But overall, when you take a step back and describe Metafide, it's understanding the viability and quality of assets, where the value is, and ways to capture the value from the ecosystem. So that's what we offer.
So, like, what I wanted to know is like, why is there a need to actually rate these assets, or why is let's say valuing these assets is important in the current time? Like, I know a basic understanding that it can be easily manipulated, but are there any other reasons for them to being rated? Is there any other entity that are actually regulating the space? So how is Metafide actually getting into that space?
You touched on a few interesting points there, right? Is there any entity regulating the space? I mean, there's a bunch of agencies that have claimed to regulate, right? And so you have, the SEC is looking at it from a fraud perspective, but just because I look at something and say, well, it's probably not fraud, it doesn't mean it's a good thing to get involved with, right? So it's a complex problem with an underserved market, right? So the first is, do I want to invest my hard-earned money, time, effort into something, right? Like that's the simple case. But if you look at the promise of cryptocurrency and blockchain, right, can you link a bunch of people that are different cultures, customs, different objectives, and they can understand a way to transact and set up exchanges fairly, right? And if we want to get there, you have to have a way to build reliably, right? So even outside of the fraud case or outside of the investment case, if you're a builder, you want to look at things like the way we've done ratings or the way we've scored quality, asset quality, because you want to understand, am I going to take my brain power and my team's brain power, and we're going to spend the next 3 years of our life building something? Like, you want to make sure that you're getting involved with something that's going to be there, and it's going to have a community, and it's going to have all the ingredients to then take the promise of what you're doing and build it into something. Now, it doesn't guarantee that the community is going to be there a year from now, but if the community is there now and the investors are there now and the liveliness and the vitality is in the ecosystem, it's a good idea to get involved with that versus something that doesn't have it, right? So just, there's a big promise and a paradigm shift in the way the technology can impact the world. And we need to make better decisions, not just on a whim, not just off of, I heard some guy read a white paper, it had nice colors, so I want to get involved with it. Like it's a real, empirical way to evaluate whether or not I want to get involved with something. And then that goes for builders and investors alike. So it's kind of a partnership between the people building a new world and then people deploying capital and brain power to help move it along. And there needs to be a way to make sense of it all. So that's where we came in.
Got it. So I guess this question is better suited for Bart to answer. And what I want to know is, how are you guys taking this product out to the users? Like, I guess people are still not aware about the product. So there's like slow, gradual understanding amongst people that they need to be in a regulated market because there are people who are constantly manipulating crypto markets. So how are you guys taking it to the users and making them understand the need for this whole services that you're providing?
Mm-hmm. So just on that rating side for the users, we've made that product completely free because, we believe it's great for the space. It benefits everybody. It's not something that we see directly making money off of. So we can offer it to people to bring better awareness to the space. That's great. So by offering that for free, we've also been going around and creating now our token and this whole game that's going to allow us to move from a B2B business where we were building tools for hedge funds and market makers, and then allow us to build a whole interactive game with a treasury that we manage on chain that allows us to deliver the same success that we've been delivering to hedge funds and market makers back to retail and customers. And what's great about this is we can utilize our AI tools where someone doesn't, on the retail side, need to have the full understanding of or knowledge of how to successfully trade, but yet they can use Metafide and get exposure and be able to trade with that. So our approach to getting this out to people has more about going around and trying to create community on localized levels. We find that, in this industry, it's very hard to maintain community. There's a lot of people trying to create incentives out there and sway community to go to one platform to another. And it seems, again, like, this isn't a sustainable model. So for us, it's about going to these local areas, building, real community there by, sponsoring events, being there in person, speaking, hosting, other events ourselves or attending podcasts like with you right now currently. And then in those areas, once we found those right community, continue to have members over there and then other resources and tools that we could provide to continue to grow those people. So that's kind of our approach right now. It's just going after people on a smaller level and then growing out gradually.
All right. So what are the exact vulnerabilities or I would say security issues that you guys are kind of solving or needs to be solved so that people become more safe and they get better with trading and getting into the space? So can you shed some light onto those vulnerabilities if possible?
Yeah. I'll start off with one of them and then I'm sure Frank would like to answer a few as well on that. One of the things that we first did at Metafide, which was one of our big successes, was predicting the depegging of USDC 3 hours in advance. And this is something that you would expect, a majority of industry is using these stable tokens, that they would have some type of system to monitor these tokens and, be prepared for depegging events with exit strategies to maintain, that risk during any of these out cases. What we found in this industry that was very concerning is that no one had any of this infrastructure to detect these events or had any plans for when something like this occurred. And so for us in this industry, again, it's making sure that, these things that we expect to be secure, like a stable coin, aren't actually, and here are the details and what's actually going into that peg and being able to maintain it. So do you want to add anything else, Frank?
Sure. Yeah. So there's a couple different ways to look at this. Like, I'm an old school, hacker. I grew up, exploratory computing my way through things and understanding the world like that. And, if a system can be exploited, it will be exploited, right? That's just a law of the world that we live in. And you should expect your technical flaws to be exposed. And in some cases, right, it's done by a group of people or a group of folks, and it comes to you in a way that's like, hey, look, I exposed this, you should fix it, right? In some cases, it's a breach, it's a hack, somebody makes off with, you know, whatever, some assets that you know, probably weren't theirs to begin with. Like that's one way of looking at the security issues that we're facing. However, the bigger flaw, and the one that blockchain has the best promise to solve, is most of the things that you see are actually people problems, not technical problems. Like the FTT meltdown, that's a people problem. Greed, overzealous, like, you know, over exuberance, like irresponsible handling of it wasn't a breakdown in the technology, it was a breakdown in the human condition, and people not setting up, you know, the fix for that isn't less crypto or less blockchain. The fix for that's more blockchain, by setting up contracts that are better, that serve the people using them better, right? Like we need to make better contracts and use those contracts, use the technology to fix it. I think, you know, you look at a lot of these like rug pulls and stuff that you see, really, it's always the same thing. And Matt brings this up a lot, so I'm going to actually steal a line from him. But like you'll see a project pumping through the roof, and then all of a sudden there's like an internal breach or something like that, where it's like somebody on the team walks away because it wasn't constructed in a way that had a contract that needed to be honored, that did the right thing by the users. It wasn't a technical flaw. It was somebody that had greed, had access to something, and misrepresented some promises. Then nobody checked them on it, right? So I will say, Metafide is not in the business of auditing contracts. Like we have partners that do that, and you know, you should look at companies like Halborn and stuff like that, where they're going to do things like that for you. But there are certain telltale signs when a token starts trading at a much higher velocity than it like ever has, and prices moving in a way that doesn't typically move when it's being traded like that. There's a bunch of signs that's at play. But you know, the thing that we need to do a better job with as a community is fixing the people problems inherent in what people do that is not great to one another. And you know, the promise of Bitcoin was it eliminates the central banks from inflating money supply. So, you know, if you work 2,000 hours in a year and you save 100 of your hours, at the end of the year, the bank hasn't inflated away 20 of those, and you're left with 80 hours of your time to make decisions and purchasing the savings with. So we're still in the process of building the world that solves for the people problems. And that's a bigger threat to us getting to where we're going, because people problems aren't going to go away. You need to set up contracts and ways to like stop them and keep them at bay, right? Like I think that's an important point that everybody should keep in mind as we're building for the future here.
That actually makes a lot of sense. So what, like with this, what piques my interest is like, with so much increasing complexity, how do you maintain this accuracy? Like if you are giving any analysis out, or if you're analyzing an asset or a value of any token or any digital asset, so how do you maintain the analytics and accuracy of your analysis?
Well, one, we have a lot of experience in engineering complex systems. You know, I previously founded a company called Social Flow. You know, we are looking at data from 3.5 billion users every month across the world. We're the sort of software record for media properties, and use it to do a bunch of predictive analysis. So having a strong engineering team is definitely like one way to do that. The other thing is prioritizing the signals that make sense, right? So not over indexing on noise, getting measurable signal, looking at sort of what's normal, and then when things vary outside of normal, like what does that signal mean? And getting a discipline inside your company of understanding, like, well, what like having a curiosity to chase down what those things mean is pretty important. And I know that's like a generic answer, but it's not a specific. It's like it's a perpetual, ongoing like mission to find out what those things mean. Like that's what we're doing, and I think that's why that answer probably makes sense. Instead of giving a very narrow and specific answer, it's like you have to find out what those signals mean and then chase them down. Like, and then never stop doing that. I think that's a critical ingredient to getting to the next phase of what we're all building for. So yeah.
Correct. So, like, let's say with all, like, considering that there are not fixed, I would say, key points to analyze of token, but what are the few key points on which you actually analyze a token or any digital asset and figure it out or rate that? So how does your rating process look like?
Okay. So I would say first break it into two categories. Stable tokens belong in their own, right? Since you're mapping things back to something that should have a fixed peg. And stable tokens, obviously, the biggest thing it can do is hold its peg. So how well does it hold its peg? How well does it vary off of it? At Metafide, we consider something that has 0.005% movement one way or the other in any interval of being off its peg. So it's a very unforgiving metric for us when we're scoring the viability of stable tokens. And then not just hold its peg, but hold its peg at volume. Like that's important. So, like if somebody's putting, $1,000 through a stable token, big deal. But if it has a decentralized network and it's able to hold its peg and it's very flat, then you can build on that, right? And then you can start to make some decisions for it. On the other side, what you want to do is you want to look at the rate of sort of community growth, along with the token velocity, along with the new wallets transacted. There's a golden ratio that exists for a bunch of things like users to transactions or transactions to price movement, or like it's a comparative relational way to sort of integral your way through the world. And you build this healthy series of progress when you're building a token. Like you want to see that out of the non-stable tokens. So is my community growing at the rate another healthy community is growing or thereabouts in terms of value, in terms of the carrying capacity per trade, in terms of like how much the average size trade is, how well is it distributed amongst the users? So a project that has 15 major holders of the token is not going, even though it has $1 billion of value, is not the same kind of project that has 400,000 holders of a token at the same value, right? Like I'd much rather invest and hold the token with the distributed set of users, right? So it's that. And then, in addition to everything I've just described, we apply a contagion model to the things we analyze. So susceptible, exposed, infected, recovered. It's the model that they use to model out the spread of COVID or Zika. It actually is very good when you apply it toward graphs like the blockchain, because you can see all the participants. And so if Matt and I share an edge to a token, and you and I share an edge to a token, and you perform an action, how likely is Matt to do it because he could see that, right? So if he sees it, what does he do in sort of taking that action? And you can model these things, they spread, and how long they stay in which state. So he might get rid of the token and then pick it back up, which is exactly how we model the spread of the USDC phenomenon through the graph. But that's another healthy way of looking at it. So we saw that on the stable token side. That's actually a great example. And then what we saw is the contagion spread to literally people dumping the tokens and just consolidating in Bitcoin and ETH because they lost faith for a little bit in the banking system at large. But you look at things like that and sort of understand how how the crowd's going to take up those patterns, and you can start to get a good understanding of what the non-stable tokens can do in terms of value generation, risk mitigation, like, capital improvement, capital growth. Like, that's there. You want them to do that. Like, there's also healthcare tokens and water tokens and food. So do they have a viable community, or is it just a bunch of whales holding it and then hoping to dump it for a quick hit, right? Like, those things matter.
So Frank mentioned community a lot of times while he was talking about it. And to be honest, anyone who's into the space knows that the community plays a big role in any projects into the Web3 space. So when we talk about price movements or whales dumping out, how do you think community reacts to it? Like, is it possible for the community to actually collude together and bring in some price movements for the people who are getting into the space, or to market it out? Like, how do you think the community plays in the price movements, and if rigging is possible by them?
I think community plays a large part in this, right? 100,000 retail users versus one whale. Usually, the majority of the time, they're going to overtake and control, I guess, the outcome of that asset. Usually, community is really important at the earliest level, because if you don't focus on building community at early level, usually it becomes a little swayed where, you do have whales, maybe it's institutions like VCs, or maybe it's other early backers. At an early level, sometimes if they have too much of that token, it could definitely be a risk for the success of your token long term. And then the only way to combat any of that would be to continuously grow that community and have a flow of new users coming in to support, as people either exit, or manipulate your token price. So I think, again, community at the earliest level is important. And we see a lot of the time people trying to incentivize these things with really quick rewards, which is just a way to get whales in to kind of hurt you down the line. Because if I was a whale and I saw, on one of these restaking protocols, as an example, that I could bring in just my ETH, say $100,000 of ETH, and I'm going to receive back, an extra 10% of rewards in this platform's native token. So as a whale, I would go to that platform and I would maintain all those rewards that I can, right? Bring my $100,000. As soon as that rewards are out, I'm incentivized to leave, because there's another platform, a restaking platform, offering the exact same thing. Hey, bring $100,000 in. We're going to give you 12% now. Okay, so now I've moved my money over there. And what this does is it creates a vampire community almost in those early days of people who are just out there, searching for higher yields and rewards. There's no care about that project, and, it's just money to you at the end of the day. So it's important, again, to not have your incentives just be around money. It's really important to try to create good acting characters in your ecosystem, because those good acting characters will trade on behalf of your side in belief when, others aren't. So community is important.
I would just add to that, early on, as we're going to launch the FIDE token, it's a way for the community to compete against our AI, and then improve it and actually share in the upside of AI in the financial markets, right? And we can do this. It's easier for us to do this than the average project, because we have a revenue stream powered by hedge fund partners that are generating trading fees on our platform already. So we're already a successful platform. But we've deliberately turned down offers to buy large chunks of our token in the early days, just so that we could have it in a more decentralized fashion when it comes out the other side. Like, we believe this so much that we've taken the hard route. We've foregone like an easy, quick hit of our own, and not sold the token to somebody who's wanted to buy, nearly all of it, just so they can have it, because they know the way the tokenomics of our project are set up, that it's going to be a good outcome. But it's important for us to build the community and reward the community that finds it the right way. Like, we have time to build our project, and we want to make sure we invested in the people that are going to be there through the whole process, right? So that's not just lip service. We're like, we actually believe that we've already done it. So
Yeah. So that's a really interesting take on that. And like with the insights that you shared, I came up with two questions. One is from a brand's perspective, let's say the projects that are launching into the space and want to attract community, because the thing is like a lot of VCs or angel investors in this space look out for the socials or they look out for the community to actually fund those projects. So usually projects go for like these campaigns or airdrops, as you mentioned, just incentivizing them and bringing in the community for the raising of funds, and then letting those like sometimes the people stay or the users leave out. Majority of them, there are bots as well. So how can a project or a web or a brand can like actually build real community with users who actually associate with the product and would like to stay connected with the project as long as it is creating value in the ecosystem? So if you can share insights onto that. And second question is more of like, as Frank mentioned, that you guys rejected early selling of huge chunks of your tokens early on when you started. But a lot of projects see these early sales as a fundraising opportunity. So what do you advise to these users? Because to be honest, it's more of like the people who are looking to raise money or raise funds for their projects. Crypto seems to be a very easy way to go that down, because anyways, VCs or angel investors do not invest into funds as easily. And then there are other regulations that comes into picture. But with crypto, it gets very easy to raise funds. It's like crowdfunding, and then people can actually build their projects. And a lot of times we have seen that people just raise the money and then dump the token and like just leave the things away, as you mentioned, rug pull in that case. So if you can bring insights onto these two questions, that would be great.
we'll do the first one, Matt. I'll do the second.
Yeah, the first one you were asking about branding. Again, could you just repeat the first question just a little bit?
Sure. So the first question is like, with community taking a lot of place, people getting into the place, and people actually like the brands want to build their communities, right? Because ultimately everyone knows that crypto or Web3 project is community-based project. So they're building their communities. But now they want to raise funds, because anyways, like development takes money, marketing takes money, building out product and getting things sorted takes money. So in order to raise those funds from VCs or other investors into the market, people kind of build quick community. So they incentivize the whole process. Like as you mentioned, let's say running an airdrop, running a giveaway. So that community gets built initially and they give away their tokens, but and so that they kind of build a credibility over their social medias or their or their communities, and then using that leverage to get funds from VCs or other investors. So, but let's say if someone wants to build a genuine community, so what could be the key pointers or steps that a project can take for that?
Yep. Yeah. So you said it yourself. You said, hey, everyone wants to build a really fast community, have it hyper scale. And again, that's usually not the way you build community. Community at the end of the day gets built very slowly. It takes time. Community is built usually around trust. It's usually introduced from one trust to another. I trust you, Ashmeet, and then we have a relationship, and then we start to have a community. You bring someone else into that trusted space, and now we share that trust. And then we figure out how to grow that out from us and add more members, or exclude members because they might not be right for the community, or they might change how our community is at an early level because they have so much influence and it's a small community where they might sway and pull the other members to the other side. So I think what people in crypto are doing right now definitely isn't the right way to gain a sustainable community. Like the incentivized airdrops, they bring in quick users, they bring in a ton of bots, airdrop farmers, like people who are trying to, again, vampire off of these various projects. And that's dangerous at the end of the day. But what those also do is they act as, marketing or kind of a funnel to kind of capture your initial users, which you do need, again. So it's about finding a balance there. And I think more importantly, it's not just, providing some monetary or quick value to these people. It's about finding something of substance that you can provide that value where, doesn't cost us anything on our side, but yet that person, the community, is going to be that much better off from this. And since they've benefited from us, they want to come back, provide more, help others benefit from it as well. So in our area, right, for example, how I can see this really spreading and being beneficial is, once people start to see the success of our treasury on the retail side of things, and if someone, put in, a couple bucks and they start to get some returns on those assets, and, 3 months down the line, they see our next buyback coming in, and again, our token continues to appreciate, and we build that trust with the community, that person, seeing that trust that we built on chain, proving our success month after month after month, might now go to their close friends, hey, listen, I'm doing really well in this ecosystem. I trust these guys. They've brought me all this value, transparency, etc. I want to extend this to you because I see something really good over here. And now I want to share something really positive with you and bring you into that. And that's when you start to get that network effect where you've made people have a better outcome than they did before. And now that person, as a thing of generosity, wants to share that with other members of trust that they have and bring them into that success. So that's how we see it, really establishing trust in the early level and maintaining our community, taking care of them, and always doing what's best in their interest and remaining transparent. It's not just us as founders, we're talking about a decentralized ecosystem, as much as, we contribute, our community is a large contributor to this project as well, and as important.
Right. Yes. Critical point, Matt. Thanks. I would say the second part of your question.
Sorry to interrupt, friend. I just have one follow-up question to Matt before you move on to the second part.
Okay.
So I just wanted to know, how do we incentivize the initial users? Because I have been working in the marketing field for quite some time. And the thing is, whenever a project is starting out, it gets very difficult to onboard initial customers because first, as you mentioned, we need to build some kind of trust. So trust is not there. And if we go ahead with airdrop or giveaway, majority of the times as a marketer or as an entrepreneur, I do not feel it to be any value creative kind of thing. It's more of like giving away some random money so that I can get some attention of the users who might join my socials, and I can show to my project leads or my managers that, okay, this is the kind of growth that I have brought in. But when I think of it from a entrepreneur's perspective, I know that there is no real value being created there. Because ultimately, I know that those majority of the users that have joined my community because of the airdrop will leave that community as soon as they get their rewards, as you mentioned, like the vampire thing. But let's say I really want to incentivize the users, I want to build in trust, and I want each and every early adopter who joined my project when I was starting out to be incentivized so that at a stage when I started growing or I have reached a level where they can go out and actually talk about my project, they can bring other members from their trusts. So how do we build that initial stuff for the project? If you can help me.
Yeah, I think, it's difficult to discern online right now, trust for these projects. You get so many different ads and banners in your face, there's one in a million of them. I think what people forget, right, when we talk about technology too, being hyper scalable, people forget that there is a really, smart approach to going local and showing face and building that trust. And so for us, for example, how do we gain community on those early levels? It's actually going to the conferences or in events, say like an event in India, going there, speaking to people, providing, in that conversation, thought leadership, something of value during that, speech during the conference. And then afterwards, staying around, just being hey, I'm open if anyone wants to talk to me, have any questions, even if, might be adjacent to what I'm saying. Let's talk about this and how can we help you, right? And then it's about sitting there afterwards, having, maybe 50 people line up wanting to talk to you, and then taking the time with each one of those individuals to hear them out, understand what's going on, and then discuss, hey, how can we benefit from each other? Okay, great. Let's stay in contact right now. Let's try to move this to the next level and show people, hey, I'm here in person. I'm trying to work with you guys, and I'm going to provide that support. I'm not, some guy over email, we're going to send me a message and then I disappear, the next day. I'm trying to, make an impact here with you guys. So
Yeah.
I think that's how I see that approach being successful.
That actually makes sense, because that's a great way to market initially and build the initial community. And I guess, as you mentioned in the previous section, that with these first onboarded users or community members, you need to build them with trust. We need to be transparent with them, and then leveraging those initial users to bring in more. So that actually makes sense.
And it's not as like as long of a process as you think, right? Like in the beginning, it might be one-on-one. You're having a conversation to gain one community member. But what happens is, people like yourself might come to the event. You have a podcast. You have a community of, a couple thousand people in that, right? All of a sudden, you extend your trust to me because we've built a relationship. And now you're, extending that trust to the rest of your community. And just because you and I had a one-on-one relationship, now we gain, access to 2,000, 3,000, and it's a really beneficial thing for both of us at the end of the day. So that's how I see it. It's slow, but you just do the work and continue it. And then eventually it sticks if you're doing the right thing.
Yeah, that actually makes sense. Now, Frank, I guess you can move on to the question that I asked, and I guess it would be great.
Yeah. And so the question was along the lines of, how do you align, I think, investment in the space? How do you talk to people about what they should get involved in? I'm actually going to continue with a point that Matt made, and that dovetails into this exactly. The two questions go together. And you could tell by the way Matt's phrasing his answers to how we think of this, right? Where I would stress to anyone listening, you could look at this as, how do I capitalize on this moment? That's your task. And I think that's the wrong way to do it. If you're trying to capitalize on this moment, what you're just trying to do is you're trying to convince people to do things they might not normally want to do, they don't strongly believe in, they could be convinced, that's not a great way to do it. What we're doing, and anybody that wants to come along with us is we're down, is we're convincing people that they can be a formidable rebellion, and we're going to convert the rebellion into a revolution. That's the way to look at this, right? You could be someone who just does something for the moment and checks a box off, or you could be a real player in your life and make your own decisions, take your life back, could rebel against the system that's been misusing you, and convert that to a revolution that persists with the real people that were part of it in the beginning. They should get the rewards. They should be on top with you when you get to the other side of it. And you should build the communities, the products, the ways to talk to these people that treats them as such, right? And so we're talking to the investors, you give them a signal for the things that are going to persist. I'm not saying if a meme coin is going to 50x, maybe invest some money in it, but don't put your life savings in it. Don't put so much trust in the temporary, ephemeral, quick hit, culture that's being built. Protect yourself, get what's yours, but be the kind of person that invests in change. Be the kind of person that betters your life through the decisions you're making and the things that you build and the people you associate with. And we get a chance to do that with this. It's not just hyperbole, right? You can do all of those things, but you got to do different stuff. If you want different stuff to happen, you have to do different things. And this is our chance, right? It's probably the best chance in my lifetime or several lifetimes prior to this, right? So what are we going to do with it? That's how you should approach this. Who are you going to associate yourself with? Who's on your team? Who's going to make the change that you believe in, and keep investing in those people and don't give up on them, right? That's what we're going to do. And that's what we're building. So thank you for having us on and talk to your people. That's, I appreciate it.
Yeah. So that's actually quite an interesting, I would say, perspective to have, because honestly speaking, in the current crypto space, it's more of get rich quick or make money quickly and be at the forefront to have your money 10x, 100x, even more. People are making millions just by investing thousands or even less. But let's say even if people are doing that, like, how do we change that narrative? Because, like, if I take up the example of Solana was actually, like, it wasn't too big before this. I would say a couple of months, all of a sudden Solana started taking it big. There were meme coins that came up, and that actually made people damn rich. Like, I'm not sure, but Bonk, Boom, Pepe, all these kinds of meme coins are actually making people rich, and people are in it for that whole space. But let's say, how do people sustain themselves for the larger growth? Because ultimately, we all know that these altcoins, like these coins, do not have any utility. So at the end of this bull run, these coins will again go back to the place where they were coming from. And then, as we talk about Solana, there was this huge blockage, or like there is no there's so much congestion on the network, so transactions are not even going through. So with all this thing happening right now, how can a person sustain themselves into the market and actually make it big? Because from where I am coming from, I believe we are still at the moment where .com bubble was in 2000. It's like it still hasn't grown to its initial or real values. So how can we sustain to a time where we actually eat the fruits of this actual boom? Like, how do we sustain that?
So it's a complex question. I'd like to break down into 3 parts.
Sure.
First, I'll address the technology piece and the way the technology spreads and matures. When you're looking at the internet revolution, it actually started the technology, TCP, IP, transfer from computers. That started in the 70s at DARPA and spread, to build a organic community around it, right? So the technology itself had a, 30-year lead time before, or like a 25-year lead time before it started making it to the mainstream. Whereas blockchain, the technology grew alongside the use case. Maybe it was 2 years ahead, and then it started to blow up. So you didn't have this maturation period for the technology to get out in front of the ecosystem that's going to develop behind it. And when that happens, people gravitate toward the easiest thing to do. That's like a way to spread with the technology, because people like novelty. Like, if you've ever been in a room full of developers and you have a way to do something, inevitably one of the developers is going to propose a way to use a different technology that just got invented. It's not really tested, just because they want to use it. Like, it's just in human nature. And you got to be like, hey man, maybe we should do something that works first. And then, so there's that. The follow on to that though, I think, how do I say this without, I don't want to alienate folks. I would say, if you're looking at people who made a killing on Bonk or Pepe or whatever, like, don't throw the baby out with the bathwater. Like, nobody begrudges you that you got rich doing that, right? But we need to change the way we prioritize what we're doing to be the kind of people who value the outcomes that you can do with change. So if you made $10 million off of Bob, right? Take some of that and find a way to invest in projects where kids eat or get healthcare and make money that way. You're a baller if you can do that. If you can show me over the course of 10 years, you fed 100 million people, I care about that way more than I care about your stupid Lamborghini, right, that you're driving around, and that, like, nobody really, they tolerate you so they can sit in the passenger seat of your car. Nobody wants to be that guy. Like, being the kind of person that feeds kids, that gets people, a business where doctors get rewarded for providing healthcare at a fair cost to people who need it and that want it, that aren't forced to take it, right? Like, that it serves everybody in the community. That makes you a genius. That makes you a baller. That makes you the kind of person that, like, I want to be around, right? And so we as a community can start propping those people up, right? And so, like, if you made money off a quick hit meme token or whatever, fine. But, like, don't just run away and become the kind of person who thinks wealth is going to make you likable. Find some way to, like, invest in the world and make it better, right? Like, and crypto got you there, right? So it's a good signal that it can get you other places as well, right? So find a way to do that. I think, like, I don't begrudge people who 50x on a token and get wealth for the first time in their life, right? But like Matt said, and like, we like, this is like where this is going. You have to do the work, invest in small communities, build it up, link them together, build a strong, stable foundation, because the wealth capacity of something like that is so much greater than these like nibbles. Like you think walking away with a Ferrari or a Lamborghini is like life-changing. But what's life-changing is a never-ending stream of repeatable income in an industry that you won off of people who don't deserve to have a monopoly on it, right? Like that's the kind of person you should aspire to be. Don't just eat the crumbs off the table. Build your own table, right? Like that's what you should do.
That was great, actually, Frank. That really was great. And before I just end up this discussion, I have one last question. If you mentioned about contagion model and how the spread actually works in the initial of our conversation. So what I want to understand is like, how does how does the crypto world is contagious to the other real world assets or other traditional assets, as I might say rightly? So what is the correlativity between the traditional assets and these crypto assets? Like how are these related, and if they are, to what extent they are related?
I would say that they are one-to-one related. They're directly correlated. We don't see the world as Web3 and Web2 or, crypto and non-crypto. I think if you're a participant in an economy, what you want is the best deal for me, the easiest way that I can get it, right? So the better Web3 becomes at becoming faster, cheaper, more responsible, safer, like you can win more of the business from the old way of doing things. So like when you're looking at tokenizing assets like parking spaces or boats or parts of condominiums inside buildings, right? Like that's a great use case for Web3 because you can transfer all the ownership, the paperwork, the compliance, like all of it with a click, right? And so that has a promise to change the world quite a bit. Like if I want to lease a parking space for the summer, I shouldn't have to go around trying to find people to do it and fill out a bunch. I should be able to have all of my stuff, my credit history, like all of the stuff tied to tokens that I give permission for my data to be used, right? And then that is all like packaged up in the promise of Web3, right? So like all I see is a world that hasn't changed yet that could change for the better with this set of technologies. And I don't think that Web3 is the end. I think it's the next point in progression that we should keep going on. But you asked the question like where I see how correlated they are. I think if it fits better there, let's do it that way. And I think that a lot of the things that we're looking at for real world assets work better with Web3 because you can trace the custody, you can trace the compliance, you can do all the things that you need easier, faster, better, cheaper that way, right? So yeah.
Yeah, that really was great, Frank. And thank you so much for coming up on this podcast. I guess we might be like, I had a great fun talking on this whole thing, and with all this thing, I believe we can have further conversations discussing the Web3 space in general. That could be really insightful for the users. And it was great talking to you guys today. So thank you for joining in.